All right, I'm going to look at stocks today. This will be a short video. We had, a short consolidation here around 13,000. The Nasdaq did very marginally close below 13,000 last or early this week, but it recovered it immediately the next day. We're breaking out today. I'm pretty sure we're now starting the final melt-up phase. During this phase, price should stretch anywhere from 40 to 60 or maybe even more percent above the 200-day moving average. As this progresses over the next month or two, we'll start to see the general public really start to pile into the market under the assumption that something different has happened, and this is free money, and it won't be. This is just human emotions. This is what happens during bubbles. Everybody finally takes notice. They all pile in thinking they're going to get rich quickly, and that there's no risk. And then eventually you get the last buyer, and then the bubble collapses. And when this happens in the stock market, it triggers a recession. This time it may, well, I would think that it would trigger a depression, except I think central banks will just print insane amounts of money, which they're already doing, but they'll magnify that by 10 when the stock market collapses. That may halt the selling in the stock market for a while after the initial bubble collapse. And then I think that liquidity is going to flow mostly into the commodity markets. So once the bubble pops and we get the initial huge crash off that bubble top, stocks will probably go sideways, and then I think we'll enter into a period of stagflation and then severe inflation as central banks print more and more money trying to resurrect the stock market, and then the liquidity will just continue to leak into the commodity markets, giving us ever higher inflation, which of course will produce even worse economic conditions and will increase the wealth gap. And if the Democrats, as they promised, start to raise taxes, they're going to have to do it on everybody. So people will get to keep less of what they earn, and then inflation will take a big chunk out of that. So the wealth gap is going to do the opposite of what is intended. We're not actually going to shrink the wealth gap. We're going to make it much worse as inflation starts to eat into what little the government allows people to keep. So I think we got some rough times ahead over the next 10 years, but I think there's a lot of money to be made in the commodity markets, and there's a lot of money to be made in the stock market here for the next probably at least 2 months, maybe 3. And then at some point here, as everyone starts to pile in, we'll get our last buyer, and then we'll get that huge crash in the stock market. And that will be the beginning of a long-term secular bear market in stocks. And we've already started the bull market in commodities, but that will start the bull market in earnest in stocks, I believe.